The market for Valmet services, automation and process technologies continued to be relatively active in 2022. The highlights of the year included the finalization of the merger between Valmet and Neles, and since the 1st of April, Neles has been part of Valmet, forming our fifth business line called Flow Control. But before going deeper into the full year, let's take a brief look into the fourth quarter results. The orders increased in both stable and capital businesses in the fourth quarter. The total order intake grew by 27% to a bit under 1.4 billion euros. Net sales were 1.5 billion and the comparable EBITDA 196 million. Both sales and comparable EBITDA increased. The EBITDA margin increased to 12.7%. Moving on to the full year numbers, comparing to the year 2021, orders received increased by 10% and order backlog grew to 4.4 billion. This was the first full year in Valmet's history when the order intake was over 5 billion euros. Net sales increased to a bit under 5.1 billion and the comparable EBITDA was 533 million. Comparable EBITDA margin decreased to 10.5% as cost inflation impacted the margins, especially in process technology segment. Like mentioned, we reached a major strategic milestone in April when the flow control company Neles was merged into Valmet. After the merger, Valmet now has a large, stable business, and we provide our customers with a unique and competitive offering which covers process technologies, automation systems, flow control solutions and services. We are happy with the progress of the integration and the strong start of the new flow control business line. Approximately 12 million euros annual run rate cost synergies were achieved already by the end of 2022. Due to the merger with Neles and good organic growth, the orders received of Valmet's stable business, consisting of services and automation, increased to 2.8 billion in 2022 and net sales increased to 2.6 billion. Services and automation segments contributed 427 million to Valmet's comparable EBITDA in 2022. Valmet's stable business has several benefits. It is recurring and predictable, provides resilience to business cycles, makes Valmet's order intake less cyclical, and the future growth possibilities are good. Let's then take a look at the dividend. Valmet's board proposes a higher dividend than in 2021. The proposal is for 1.3 euros dividend, up from 1.2 euros last year. This represents a 68% payout ratio and roughly 4.5% dividend yield, calculated from the current share price. The dividend would also be well in line with Valmet's dividend policy of at least 50% payout ratio. The dividend will be paid out in two installments. The first installment will be paid in April and the second one in October 2023. The guidance for 2023 is that Valmet expects both net sales and comparable EBITDA to increase compared to last year. The short-term market outlook is good in 5 of our 7 businesses. Global turbulence caused by the war in Ukraine and the economic and political developments is expected to continue. Past years have shown that we at Valmet can adapt well to continuous change, and we will continue to work to retain our resiliency also in the future. All in all, this video can be summarized in a similar manner than a year ago. Valmet's business is supported by favorable megatrends and our unique offering differentiates us from the competitors. And the comparable EBITDA has increased every year since we became an independent company at the end of 2013. Valmet is starting the year 2023 from a good position.